18-20 points on the Nifty, but that won't count for much. Lalit Nambiar now joins in, fund manager at UTI Mutual Fund. Lalit, hi, good morning. Good to have you on the show. Is this a time to look at your portfolio and say, let me add some of the good quality stocks, or would you say this is a time to actually maybe raise cash levels and then look at better buying opportunities?
I think it's definitely a good time to go bargain hunting, and our theme has been for some time the economic cycle and the recovery, which will more or less looks like is in transition in India, which is likely to happen over the next year or so in India. And that doesn't change because the global factors will obviously impact India because there are a lot of FII flows coming into India. We are dependent on FII flows. But having said that, the India story doesn't change for us. So it's definitely a time for bargain hunting, I would say.
Okay. Lalit, hi. Good to see you in on a very tough day for the markets, but we are seeing some amount of recovery. When you talk about bargain hunting, I know you can't talk about stocks, but which are the sectors that you would be most confident on?
So we keep talking about the recovery, and we keep talking about the fact that the sectors which will lead the recovery would be things which go in before industry sets up capex. So it could be cement. There is also a consumer-led cyclical recovery in auto, to some extent in commercial vehicles as well as in cars. So all of that, and as well as industrial manufacturing. So I don't think that theme changes. One aspect which one must bear in mind when one looks at mid-caps is whether there are significant global linkages with these mid-caps and if they're exporters. And I think that's something which we will bear in mind, because the resilience of that business model will really be tested in the years to come, given global conditions. But if it's an inward-looking, India-centric company, I think one must be, I mean, it's a little bit safer there than otherwise.
Okay, but Lalit, a lot of people have made a lot of money in 2015 in mid-caps, and we have seen that reverse with a very sharp pace over the last fortnight or so. How would you approach the broader market?
So I think it's been a stock-specific story, and if multiples are justified by what's happening at the business level, what's happening in the earnings, I don't think there's much to worry. On the other hand, if it's a function of liquidity and float management by a group of investors, I think there's something really to be concerned about. So I would separate the two. I would differentiate between these two stories.
Okay. In terms of flows, Lalit, do you think that we could replicate what happened last year in terms of FII outflows as well as DIIs mitigating?
So we're hearing that even as we speak, there are FII, long-only FIIs going around bargaining hunting, and India is definitely an attractive story from a medium-term perspective. So I think there would be people who'd short and there would be long-onlys planning to buy. And I think the story is not going to be as bad as last year, and I think things are going to probably look better in a few months from now as the India story emerges stronger.
Okay, so in your own funds, Lalit, what kind of stocks would you be adding right now with the kind of fall that we have seen?
So as I said, those early plays on the economic recovery. Perhaps I would probably venture down the market cap spectrum if I'm getting any bargains there, given a little bit of a mid-cap meltdown that we have. So it would be a good time to go and venture into some of those, because earlier the P's had got bid up quite a bit. And if I think that there are reasonable valuations available, I think we'll probably venture there.
Okay. All right. Fair enough, Lalit. We're going to leave it on that note. Thanks very much for joining in and talking to us. So